Hey guys, Chris Haddon with Hard Money Bankers here with another edition of A Bridge Loan Story. Special guest here today, my business partner and good friend, Ian Walsh. Ian, thanks for being with us.
Guys, thanks for having me, Chris.
Absolutely. Pleasure. It's going to be a cool one. If you guys haven't checked out A Bridge Loan Story before, we go through, all right, so a couple things. Let me back up for a second. For those of you who don't know Ian Walsh, Ian runs the entire Philadelphia metro region for Hard Money Bankers. So that includes Philly itself, southeastern Pennsylvania, Delaware, South Jersey, recently expanded to North Jersey. Is that right?
That's right.
Pretty good size footprint and growing. And there have been some really good production, good pipeline, and some cool deals. And one that we're going to talk about here today on A Bridge Loan Story. So the reason why we had this idea recently is because most commercial lenders in their marketing and the stuff that they put out to the world, all they send out is a picture of a property and a loan amount, maybe a city and state. And that's about it. No more content for the audience, no more things to learn. So we wanted to do one better. Isn't that right?
That's
right. All right. So we're going to talk about a cool deal that we closed towards the end of last year, 2018, in New Jersey. It was a co-op. Ian, if you wouldn't mind, could you dive in, just give us some of the basics of how this came about and where the deal came from too? Curious about that.
Yeah, so where the deal came from, we just received an inbound call, so we're not exactly sure. It's actually the individual that had called us was the actual treasurer for the co-op, and said, hey, we got an issue. We have 100 plus units under tax sale that's set to go off in like 2 months, and we need somebody to effectively bail us out and pay the taxes off. So this company doesn't take all the houses. And it was, normally a situation like this is something that may or may not work because you've got a co-op, which is, ruled by bylaws. And those bylaws typically are going to have a lot of red tape in them to begin with. And then each individual owner is, probably going to have a mortgage where they're paying or some sort of mortgage. The uniqueness about this particular co-op scenario that our attorney looked at was that there was something that was grandfathered in from like the 60s or 70s with all these homes where the people couldn't carry a mortgage on it. And it was, so every one of these.
Yeah, no financing allowed at all. Cash only.
Yeah. So they're all
rare.
Clear. And normally you'd think till the end of time, we're going to own these, right? But the problem was something went wrong in the accounting on the board's end, and there was a lot of money in taxes that wasn't paid, and the association didn't have that money to make good on it, and the time was ticking. So that's kind of what brought this to the phone call to us and said, hey, can you bail us out and give us some time here, or else we're going to lose our homes.
Yes, we have 100 plus units worth somewhere in the neighborhood of $10 million, right?
Yeah, roughly $10 million total. Yeah.
Okay. And free and clear, like that right there, which is just pretty unique, pretty interesting. And so just to keep going and clarify a couple of the points that you mentioned there, the management company mismanaged the fund somehow, didn't pay the property taxes, and it went to tax sale. You want to explain a little bit about the unique nature of tax sales in Jersey?
So, a tax sale, first of all, the lien holder doesn't, as far as I know, doesn't get any interest on their money. So they're really just strictly trying to buy the tax lien in order to have the shot at owning the property, which is fine. That's how tax sales work. In other states, you receive interest on that money. I'm not positive in New Jersey whether they were receiving interest or not, but I don't think they were. So in essence, the place that was trying to own this or bought the tax lien was in essence really trying to take these properties. That was what their goal was. It wasn't, to get paid back in essence. And it was a great deal for them, honestly. It was unfortunate because you had 100 plus people that were going to go, what are we doing with our homes? So that's kind of, tax sales though also have a right of redemption period and stuff like that in different cities. So you can't get clear title when you have a tax lien, stuff like that. So tax liens are a little different than like a sheriff sale or foreclosure sale.
For sure. Okay, so to solve the problem, to get the money to pay off the tax lien, the co-op, they initially went to a bank, right? To a local bank?
Yeah, they tried a local bank, and they actually tried other lenders locally, both private lenders and banks, and nobody could pull it off.
They went to private lenders too, and they just turned it down because it was too hairy.
No, I got a call from one of the local lenders who knew me. I didn't know he was working on it. He said, yeah, I've been trying to work on it, but they couldn't do it in time. The fact that the way we move, we can effectively do this without an appraisal if we want, right? So we can make a decision today and close tomorrow. 99% of lenders out there, private or institutionally financed, can't do that. So like, it was also against the gun of your average private lender. So we really had a unique opportunity and space to be able to pull the trigger fast and underwrite it and move on it. So yeah, both banks and private.
So we came in with a $500,000 loan to, well, before that, I know that there was some serious legal work that had to go on. We, in essence, had our attorneys, in essence, force that tax lien holder to accept a payoff, which was unusual. I mean,
it was intense.
It was intense.
Like, there's a lot of money on the line, man. Like it wasn't just $500,000. This was a $10 million property, right? So somebody was going to acquire that for $500,000. That's the deal of a lifetime. So everything we had really great attorneys working on it. I mean, really great attorneys that it was to the hour. Everything had to be done, because if you mess up, if you slip up, the other side goes, "Oh, sorry, you missed the deadline." Bang, we get it. So it was just like to the hour for like 2 weeks, honestly, like this motion, that motion, this motion, that motion. We got to present this case, show up to court. It's pretty wild.
That was wild. It's not often that you have to file motions and present stuff and show up to court before closing. Happens all the time in a default scenario, but never before a settlement, it was wild. So yeah, we came in with a $500K loan in the neighborhood of 13-14%. I don't remember the exact terms, not really the point, but so we finally had to force that tax lien holder to accept a payoff and close, rolled in a bunch of payments, and then also I think planned out the first payment into the future. And the co-op's been super responsive and proactively reaching out to us, making sure they're set up for ACH automatic payments. Anyway, one of the reasons that we wanted to highlight this deal in particular is that a lot of people in the commercial real estate world don't know that there's a private money solution to a lot of problems. This one is a great example. And oftentimes people who are so used to bank financing, and there's nothing wrong with bank financing, we all use it for our permanent loans, but for short-term needs, being aware of private money solutions could help save a deal. In this case, could help save a whole complex, right?
Yeah, I mean, you have 150 people that we just saved their homes. And we don't want to own. We don't even want to be anywhere positioned. So, we did this we wanted to do the loan, make money, and save these people's homes, and they pay us back, and they're on their way. That's how we operate. And I think a lot of people, I get some calls for sure for commercial space, and you do just what you said, Chris. People go, "Oh, I didn't even know your money existed for that kind of stuff." And you're going to find in commercial space, big commercial, that like the need is there because it's an insurmountable amount of money a lot of times, right? So it's not like a single family residence where it's like, it's 30, 40 grand. I can call mom and dad and we can do that. A lot of times, like a big commercial place, you're talking $500,000, $2 million, like money that an individual is not going to just snap their fingers or make a phone call and have. And if they don't know the private money space exists and the banks aren't going to do it, like, the amount of money that is typically dealt with is much higher. So therefore, like, you need to have access to private money to be able to, in case you get into that situation, or you need to leverage your business to grow it, right? Because you're also, if you have a $2 million, $3 million business, you're not asking for 50 grand, so you're asking probably for $500,000, $1 million to leverage your business and grow.
Sure.
So having private money in that space is incredibly important.
Absolutely. And being able to save a deal or a situation is why we're doing this. Obviously, we want to tell an entertaining story, put out some good content, bring people our way, but also potentially help solve a problem, help save somebody from a bad situation. So hope you guys got something from it. Ian, thanks again for taking the time and being with us, and we will do it again soon.
Thanks, Chris. Appreciate it.
See you next time.